Okay, so we just went over funding, and now we're going to be looking at open interest. And we looked at open interest briefly when we were doing the BitMEX interface overview, and we were looking at the contract details tab. So you should have a brief understanding of what it is, but we'll just do a little refresher here. So open interest refers to the total number of outstanding derivatives contracts that have not been settled. So as it stands, they're open, right? The interest is coming from the buyers and sellers, or longs and shorts. Now we can start to look at the decreases and increases in open interest, and we'll get into what that means in relation to price. And as we move forward in this lesson, we're going to look at how this can help us determine the trend and possible inflection points. But for now, let's just focus on the increase and decrease in open interest and what that means. So when open interest is decreasing, this is when holders and writers or sellers of options or buyers and sellers of futures. In the case of these derivatives exchanges we've gone over, we would be looking at the perpetual swap product. And that is when they're closing out their positions, right? So the open interest is decreasing because the interest is closing by either buyers or sellers. Very simple way to think of it. Now, if we look at open interest increasing, well, this is when investors or traders, whatever we want to call them, are opening new long positions, or writers, in the case of options, or sellers are taking on new short positions. So as open interest increases, there's more market participants coming into the market, whether that be long or short. Now, as we start to look at how this relates to price, we can start to, again, get another one of these pieces of the puzzle to help us to determine who's in control or who's off sides. So if price is increasing and open interest is increasing, well, this is telling us that the trend is strong. So we have upward pressure on price and open interest. And as we get into high block capital and we start to look at this visual on a chart and some of their tools, we'll start to see what that means. Price increasing with open interest decreasing, well, that could be a weakening trend. So this decreasing open interest is telling us that market participants are leaving the market and they're closing out of their positions. Now, if price is decreasing and open interest is increasing, this is a weak trend. And this is a pretty bearish signal, and this is something that I look at very closely. And if you can spot that divergence where we see the price decreasing and open interest increasing, it can be a pretty nice way to gauge maybe the trend is starting to weaken and there's a reversal point coming. Now, when price is decreasing and open interest is decreasing, well, this is potentially a strengthening trend. So we have price dropping while market participants, longs and shorts, are closing positions. And it gets to a point where, it gets so low and you have market participants coming back into the market, and whether that be longs opening or shorts opening, and you get these inflection points in price. And again, that all stems back to determining control. So now we have an understanding of funding, and we have an understanding of open interest and the relationship of open interest to price. In the next video, we're going to be going over something called cumulative delta. So hopefully you guys have a good understanding, and now you have two pieces of the puzzle from that sentiment analysis standpoint, and we look forward to seeing you in the next video.